Hi, I'm Steve Spencer from SMB Capital. Today I want to kind of walk you through a particular trading setup, trading idea that occurred recently, and kind of show you my process where I come up with a thesis, and a thesis that doesn't unfold in the way that I'm looking for, and how to kind of recognize that and limit losses. I think one of the most misunderstood things in the trading world for people outside of it is people think, you have this idea, and if you're wrong, you get crushed or something like that. And then the reality is, especially in the short-term trading world, is you come up with a thesis, you look for a confirmation, and if you get confirmation, then you press that trade. Otherwise, you look to limit your losses. So the particular stock we're looking at today is STX, Seagate Technology. They gave an earnings warning this week, and if you see, I posted a little clip from the warning. You read the warning. It doesn't look that severe. Slight warning on revenue. Margins coming in a little bit. That's always viewed as a negative, and so we would expect the stock to gap down initially. But the next part of our work is, once we've identified the catalyst and kind of taken a look at the details, is to say, what has this stock done over the past year, and what has it done recently? And so if we take a look at the daily view, we can see this was a $55, $60 stock a year ago. It had come way down to around 26 and change dollars a share, actually when the market kind of bottomed there in January, and that had a bounce up to the mid-30s or so. And so when this news came out, the stock had closed around $35 a share. The news came out, and it was gapping down a few dollars. And so my thought process basically was, this stock has been cut in half in the last year. Clearly things were not going well here. They've now come out with an earnings warning. Doesn't look that severe. What we've been seeing over the last few months or so is, in these situations, the stock will gap down. It'll find a recent support area and potentially have a nice bounce. And so what we're looking at here in the daily view is, you can kind of see I highlighted an area there around 30 to 29.5, and based on where it was gapping down in the pre-market, that was kind of my area to look for a bounce. You can see I put in the game plan, the idea. Here's the support area we're looking at. Here's resistance, 32, 33. They gave an earnings warning, and let's look for some sort of bounce. If we take a look at the 30-minute chart, you can see even a little bit better kind of that area where I'm looking for the bounce. And then below that, if it doesn't bounce from there, the next support really isn't until the mid-28 area or so. So the day we get to the day of the actual following the warning, we see the gap down. You can see kind of the warning came out in the after hours. It came off a couple of dollars, 32. It's lower the next morning. We're looking at it in the pre-market. The sellers are in control. It's drifting lower. I've highlighted that area from 30 to 29.50. And basically what I'm looking for is that 29.50 to support in the pre-market, or support after the market opens and there's some large sell orders, and then get back above $30 a share. And if it does that, then we start to think about, okay, can it bounce to 32, which had been the after hour support? How high can it go? And we'll play it based on what we're seeing on the tape and what we're seeing on the technicals. The other way is, you can kind of see I threw an arrow in there, is if it doesn't stop at 29.50 and the sellers are in control, we have to, if we bought into that little area I've highlighted, is just get out and kind of reassess as it's coming in, or even look for an entry on the short side, as long as we can short it far enough away from the next support area, which is in the mid-28s or so. And so I just thought this was a really nice example of something that didn't work out, which in the way that my initial thought was, which was a bounce, and kind of the process that I go through to come up with the idea, and then what do I look for confirmation, and to limit losses when you're not right, which is a large part of the short-term trading game. Hopefully you learned something.
Become a member of our trading community by joining SMBU Premium. Each month, as a community, we'll work together to improve our trading with a shared hour of learning. On our trading desk in New York City, the best traders continually grow. In fact, the best traders trade to grow. SMBU Premium is packed with 12 webinars, one a month, focused on market-specific trader training that will help you become a better trader by the end of the month. Invest in yourself, invest in your trading. As I wrote in the playbook, tomorrow you can be better than you are today. SMBU Premium, How good can you be?